final instalment of this MetLife Industry Roundtable, considering the quality of advice review recommendations through a life insurance lens. Your panel of peers discussed the pros and cons, mostly the pros, associated with the future prospect of life insurance companies delivering limited personal financial advice to policyholders. It's a very interesting conversation, as are the final comments made by each of the panel members, and there's a remarkable consistency in the optimism they show with regard to the future of life insurance and life insurance advice in Australia.
I'd like us to switch to the conversation around the fact that superannuation trustees and superannuation funds now accepted recommendation. They're able to pay staff to deliver limited financial advice to super fund members. That's number one. And number two is the principle along the same lines as to whether banks and life insurance companies can do similar things. Life insurance companies retain staff to deliver limited personal financial advice to life company policyholders as opposed to the super fund members, and banks as well. I'm not quite sure where to start with that one, but I'm going to pick on you, Sarah, to get the ball rolling. Firstly, your view about the fact of the Minister's decision to accept that recommendation from the Quality of Advice Review for super fund members, but to delay a decision in stream 3 for other institutions.
Well, I mean, the Minister's made a couple of remarks on this. So certainly the way he is seeing the difference between stream 2 and stream 3, two key issues. One is he sees the retirement income advice gap as the most urgent problem to solve. So that stat has been used many times, the 5 million Australians in retirement or retiring who need advice, and the stat that there aren't currently enough properly registered, properly licensed advisors to provide that advice. So he sees that as the most urgent advice problem. I think many of the insurance companies would argue that there's a pretty urgent underinsurance problem as well, but that was the first piece. The second piece, in terms of why super funds that the Minister has put forward, is that super funds have a duty to their members, so that duty as a trustee is to the members both as a collective and also as individuals. And that almost kind of prudential element, if you like, is something that gives him confidence to say, well, let's see how it goes. You know, these changes that are proposed are wide-ranging. They could make a large difference, for better or worse, to the advice landscape. So I think his feeling is that by restricting it to super funds, he's addressing the biggest problem with a group of providers that are perhaps more likely than average to deliver good advice because they have the best interest duty to members. So that's certainly what we've heard from the government in terms of the rationale.
Okay, thank you for that. Chris, I'm going to turn to you if you're still with us.
I am.
Okay. The Minister, in his speech notes to ASPA on the 13th of June, when he was talking about allowing superannuation trustees to deliver limited advice, talked about the fact that it's more urgent that we fix the problem for financial advisors in terms of priority. He says, I'm just not compelled that the same urgency exists in these other spaces. He's referring to banks and life companies. He says there's also a difference, Chris, between the obligations that cover these institutions and superannuation funds. Kelly's responded in a statement in response to the Minister's announcements, believes it's important that the government legislation also allows life insurers to provide limited advice to Australians directly when they ask for it. Like superannuation trustees, life insurers have additional legal duties to act in good faith and prioritise the interests of their customers. So in light of that, do you have anything you'd like to add?
It's a great summary, and Sarah's summary of the position was really helpful as well. We agree, of course, that there's an urgent need for people to receive retirement advice, but we argue that the urgency is just the same for life insurance advice. And if you play back some of the numbers, they're just as compelling. We have 13.5 million working age Australians, and we have 800 something financial advisors that regularly provide life insurance advice. So the numbers there, I would argue, are even more stark. And we know we have, number of different reports that talk about the insurance gap. And we know globally as well that Australia has one of the lowest levels of life insurance penetration among sort of the first 13 OECD countries. So the urgency is there. The numbers are the same. Going to the duties, life insurers have that duty of utmost good faith, which is interpreted broadly in relation to all matters surrounding the contract. And life insurance company directors also have specific obligations around prioritising the interests. So our job is to try and do the work with the Minister and the Treasury as quickly and as deeply as possible to make that case. But we're very strongly of the view that if the Minister takes the approach that superannuation goes first, and there's some logic to that we would want arrangements for life insurers considered at the same time or very soon after. And we do make a distinction between life insurance and banks and investment providers. Your own experience would tell you that navigating banking and credit is a simpler exercise than navigating life insurance. And we really think that advice for customers in navigating life insurance is critical. So those are the things I would add, Peter.
Okay, so bearing in mind the audience for this conversation, the context in which an individual would contact the life company directly for personal financial advice would presume there's not a strong link between them and a financial advisor. Do you think if life companies commenced delivering personal financial advice, limited personal financial advice, that this will be a good thing, a bad thing, or neutral for the financial advisor community?
Oh, I think there's mutual benefits to it. The first is that it ticks the box around our shared interest in making sure that people have the right level of risk protection, and we all need to pull together to do more to do that. It also means that customers that receive some level of advice from a life insurer will get a familiarity with the advice process, get some confidence around receiving financial advice, and then potentially move on to obtain a holistic financial plan if that's what suits them. So I don't see any conflict in interests between advisors and life insurers. We're all trying to solve the same problem here and work towards the same outcome. Which is better financial outcomes and better risk protection for Australians.
So I take it that Kelly will be this will be part of Kelly's ongoing narrative with Canberra with regard to the extension of the delivery of limited personal financial advice to life company policyholders.
Yeah, that's exactly right. And the way that we're framing that conversation is standing in the shoes of the customer and thinking about what they need. And customers with life insurance policies are not able to get the same level of what they would see as customer service as customers in a health insurance context or any other sort of professional service context. They ring with what they perceive to be a simple question around their level of cover or their scope of cover, even things like reducing the level of cover now that children have left home and mortgages are paid off. And life insurers are not able to give them a satisfactory answer to those questions without referring them through to a more holistic advice process. And as we know, there's cost to that, and there's also potentially a weight to that as well, given the level of accessibility around financial advice. So we're very much coming at it from what do customers need, what's their day-to-day experience of navigating the system and talking to somebody about their life insurance needs. And being able to provide limited advice generally to existing customers, but potentially to people that approach us as well, is a good start towards doing that.
All right, thank you, Chris. Over to you, Wayne.
I'd endorse the remarks. I've always taken a strategic view of this, Peter, is that once a client has been introduced through the advice process, whether it's limited or full advice, it's a future client potentially for an IFA. And, we're in desperate need of the super funds have to cosy up to their clients. They've got a job to perform. I don't have any difficulty with the life insurance companies come in. Perhaps they've learned their lessons. Now this time we've got 2 life insurance companies now giving advice in Zurich and AIA. So I'm a supporter.
Through their own firms.
Yeah, through their salary channel.
Okay.
But that wouldn't take much to extend that proposition to a limited advice proposition to the public. So I don't have any difficulty with it personally as a strategic. Got to see a little bit of the detail to make sure clients' interests are protected, etc., like they have to be in our world. But
so there's upside.
I think there's upside for everybody. You've always got to take a broader view of your sector, haven't you? It's not about you.
Yeah.
It's a good thing for Australians if this is done correctly.
Gotcha. Okay, Amy, your head's nodding there. You agree with that?
Yeah, I don't believe there's such a thing as competition in this profession at this point. We know the numbers are very obvious that consumers need to have access to affordable, easy to get to advice, and I don't see this as a problem. Just to ask a question, as Chris just stated, simply go, I need to reduce or increase, or is that the right amount that I need based on my current mortgage and the kids aren't here, whatever, something that can be just delivered very quickly and affordable, I think is a solution to what we have as a big problem being, our country is probably one of the most underinsured countries in the world, aren't we? That's the problem. So it's a solution.
OECD.
Pardon?
We don't do too well amongst OECD.
No.
So it gets a tick from you, Amy.
Yeah.
Okay, other advisors, Dan and Trish?
I don't really feel strongly either way about that.
Okay, thanks, Dan. Shortest answer of the day. Fantastic. Trish?
Probably not our target market.
I certainly think that people need, that limited advice from superannuation companies, from life insurance companies. I don't think from banks. I think the history has shown us that they're not particularly great at managing conflicts of interest, and I think that's always been a bit problematic, especially when we think about vertical integration. I think when we're looking at simple advice for the people who are never going to receive advice, of course they should be getting it from their superannuation company. Of course, the examples that were, I think it was Christine talked about, was should be made available to everyone. We're not going to be able to help everyone. Not everyone can afford thousands of dollars of advice. But we just need to be really careful.
Nor do they need it.
No, exactly, that's right. Nor should you have to pay for it, that's right. To just change from super accumulation to pension, something like that. Nice and simple. I do think we need to be careful with target-driven environments and KPIs aligned with targets, because that has been that problem in the past that has gotten industries into trouble.
Okay, with new regulatory reforms as they've been introduced over the last 10 years in particular would hopefully address a lot of those concerns?
Hopefully.
All right, okay.
Yeah.
So same topic, Nathan and Jeffrey, but a slightly different question. Nathan, you're going to recruit staff whose job is to deliver limited personal financial advice. Could this be a training ground for future risk specialists, IFAs?
Well, yes is the short answer. But I think the proposition that there be life insurers, retail advisors and advisors within super, I think is sound. Even if you could reverse the decline in the number of advisors over the last 6 years, it's still not going to be enough, right? So there's got to be a pipeline somewhere. At the moment, we've got the banks saying they don't want to get back into space for all the reasons you've outlined, Trish, and we've had the Minister say that he's not interested in vertical integration. But this is a snapshot in time, and if you fast forward 5 years or go out to 2030 when there's going to be $5 trillion under management, my personal view is that banks won't be able to help themselves getting back into that space. And if I'm a shareholder at a bank, I'd be asking the board, well, why aren't you getting into that space? So I think this is a moment in time at which what in previous circumstances might have been an odd set of bedfellows to get a clear understanding of how each of us in the current environment put together the regulatory framework, put together the policy making fora to cement what is an opportunity. Because I think if this discussion is happening 5, 6, 8 years' time, I'd be very surprised if the banks maintain their current position.
Okay, and so again, if I'm listening properly, you'd be certainly open to the prospect of MetLife Australia delivering that kind of service.
I'm not going to make policy on it without having a discussion with Richard if I can. But let me put it this way: it's a sensible discussion to have.
Okay, excellent. I like that. Thank you for that, Nathan. What about you, Jeff? Anything else to add?
I think the one thing that we have to keep on coming back to is what's the quality of that advice going to be? And is it going to be good advice? So we want to ensure that the level of education and training that those individuals have, if they get advice from an insurance company, or they get advice from a super fund, or they get advice from an independent financial advisor, that the quality of advice is going to be there, which means that has to start off with solid education. So the question becomes, is it if you have a single event advisor, let's say it's with an insurance company, what's going to be the minimum education standards that we're going to ask of them before they can actually become themselves an advisor, even if it's a limited advisor. And so the question is, do we look at RG 146 as at least a minimum for them, or are we going to be able to get, or are we going to sit back and say, we don't care as long as you'll be monitored by your respective insurance companies and they'll look after it? I think we need to make sure that if we're going to create this situation, that the people who are getting the advice from those individuals can rest assured that their level of education is going to be suitable enough that they're giving appropriate advice.
Yeah, I've got you. So could this be one of those self-regulated initiatives that the industry takes to Canberra and says, this is how we reckon it can work?
Quite possibly. And again, we already have a situation where RG 146 was the basis for individuals to come into financial services in the first place. And they had tier 1, tier 2, and that's still part of our legislation that we have now. So as a minimum, if anyone's going to be in that situation, I would see that would be at least what they have to do. Now, we might set higher standards, but that should be minimum level of standard before anyone gives any advice whatsoever, whether they're through a super fund, an insurance company, or elsewhere.
Okay.
Is this one of those scenarios where, like with childcare, everyone doesn't have to be qualified, but you have to have a qualified person in the room? Kind of similar thing.
Yes, Jeff.
I
Good question.
quite simply, going through that education process, I think is a minimum standard. Because if I'm a client or I'm a customer and I'm asking someone for advice, I want to hope that individual has the requisite knowledge to actually give me appropriate, informed, good advice. And if we say, no, my boss has that information, but I don't, I think that could create a can of worms that we just don't want to open.
I think
Thank you very much.
we are touching on a really important topic here, and I might just sound a slight voice of caution on both Stream 2 and Stream 3. So our members are obviously have some concerns that consumers potentially get confused if they get something called advice from a super fund or from an insurer, but it's not delivered by an advisor. Then that has the potential to impact on the reputation of the profession. And we've worked very, very hard to gain the reputation and the trust that we now have. And you can see the numbers accelerating really fast, that consumers now trust financial advisors, for example, a lot more than they trust CEOs and many other professions, and we don't want to lose that.
No.
So, we're certainly cautiously supportive, but we do think there are guardrails that are required, and one of them is, Jeff, to your point, exactly that. We do not want the spectre of, I'm sure MetLife would never do this, racing out onto the street and dragging a backpacker off the street into the call centre. I'm sure that you wouldn't do that, but we need to make sure that can't happen.
Correct.
And that we do need some minimum standards. I represent advisors because I think what advisors do is incredibly important, and I have no doubt that a consumer who sees an advisor will get the best possible outcome.
Yeah, indeed.
While we're accepting that there are not enough now, we don't have to accept that that's never going to change. And we see the opportunity to align education standards, perhaps with insurers and super funds, in such a way that we do create the pipeline of the next generation of planners, which we all know we need
Indeed,
very desperately.
It's a whole other topic of conversation. You could do a roundtable on that itself, but unfortunately we've run out of time. Each roundtable conversation is different because the people in the room are different. This time around we've sort of drilled down in a bit of detail, but the conversation's been pretty brilliant, so I'm grateful to you all for that. We're not going to open up a new topic to talk about now because we're out of time, but I would like to go around the table and give everyone an opportunity. Chris, we'll start with you to make any final comments or observations as we thank you for taking the time to be part of this conversation.
It's been a terrific conversation, and Callie's very pleased to have been involved. I think the final sort of closing observation of mine is that there is an absolute alignment of interests across the industry to make sure that more people get the advice that they need when they need it. And there's a real willingness among us all to pursue that. And certainly as far as, the role that life insurers may play in that, completely endorse what Sarah has just said about appropriate guardrails. And that covers everything from education, which specifically includes ethics training. It would include things like the Q&A and monitoring and supervision arrangements within a life insurer. So we're very alive to that. We don't want to damage the reputation of advice at all. I think we've all learned those lessons. So 100% endorse what Sarah has said around guardrails, but life insurers do stand ready to support customers. We do stand ready to play our part in providing financial advice, and we want to work with the government to make that happen.
Thank you very much indeed, and thanks again, Chris, for making the effort to be available for the conversation today. It's been very much appreciated. We're going to have, Nathan, you're going to have the final word, but we're going to go around the table, start off with you, Wayne, and any final comments or observations?
Yeah, look, I just think there's every reason to be very enthusiastic, Peter, about the current environment. I mean, even this forum is a perfect example of us talking together at senior leadership roles, which wasn't the case 5 years ago, and having an open dialogue about where the profession should be heading. Michelle Levy was a breath of fresh air. I think she's introduced some wonderful thinking for the whole sector. So it's a very, very positive time. I agree with Dan's comments. I've never seen it better to be in advice. I wish I was a little bit younger to take advantage of what's going to happen in the next 10 years. But no, I'm encouraged that we're seeing leadership in the sector, and it's in this room today, that we haven't seen before. And to me, that's really, really encouraging. The language is right, the commentary is right, the intent is right, and that is very, very pleasing.
That's fantastic, optimistic comment on which to finish. So I'm very grateful. Thank you very much, Wayne, as we turn to you, Sarah.
Likewise, I'm incredibly optimistic about the future, genuinely. And I think we've all observed the differences in the environment. There is now a recognition of the importance of advice, there's a recognition of the importance of life insurance, and that is genuine. I think we're now at a time when we have an opportunity to make changes that will really ensure that more consumers get better advice and our whole economy is better off for it for the next decade. So I think this opportunity is incredibly important. We really need to work together to make sure we can get the outcomes that we need. And I really love what we do. I'm so excited about what it means to be an advisor right now.
Okay, brilliant. Thank you. Thank you once again, Sarah. Thank you too, Jeffrey.
Quite simply, what I'm seeing here is, again, positive. Everyone wants to make sure that people get appropriate advice, that they don't go on government pensions before they're supposed to, that they have a very sound retirement. But I think the more important thing is that what we need to do is make sure that we bring more people into this wonderful industry that we have, and attracting and retaining those advisors. Now, the numbers over the past few years have not been great. And the question is, how do we make it attractive for them and reduce those barriers to entry, bring in more qualified people and interested people, because the opportunities, as we've discussed, are enormous.
All right, so it's throwing down the gauntlet, really. It's
Absolutely.
a challenge.
And I think there's a few things we've talked about. We've talked about efficiencies of dealing with clients. We've talked about education. We've talked about remuneration. And we effectively need to have a package sitting there that says this isn't just a great industry in the past, but it's going to be a wonderful industry in the future. and getting more of those people that are recent graduates or wanting to do a career change coming into this wonderful industry and helping out those 15 million working age Australians to basically get them the appropriate advice they need.
All right, so it looks like there are green shoots of optimism, and maybe more than green shoots of optimism for the sector. All right, thank you, Jeffrey. And to the advisors, Amy.
I couldn't agree more with what everyone said so far, and as also what Dan said earlier, this is a great time to be in advice. For the first time in my career in financial services, which now spans nearly 19 years, I'm actually really excited and not frustrated with potential policy changes. It's great to actually finally feel like people have been listening to us and actually recognise the great work that we do as a profession, and how we serve Australians to actually be on their roadmap to create the lifestyle that they deserve, as opposed to being in a situation where they're going to be potentially on Centrelink or in financial crisis. And that's the great thing that we do through insurance advice, through superannuation advice, through even cash flow management and strategy. And it's really exciting that I think that finally maybe our government's starting to see what we do. Finally.
Is there one policy change that stands out, or is it the accumulation of all the policy changes?
The fact that actually we had somebody external like Michelle Levy to actually look into, sort of really open up this can of worms and have a look at what we do, have a look at what the policies are, what's actually been our roadblocks, and how to actually improve it. And no one's actually come to us and said, how do we improve it? My own experience, and I'm just a small business. But it's been incredibly frustrating. At one point I wrote to every senator and MP because I was just beyond frustrated about how it had affected my business and my mental health and my friends, my colleagues. I've got a friend who's never going to be back in this workforce again because he just never mentally recovered after all of these changes. It just didn't, his business is just gone. So it's, and I don't believe we go in this industry. We don't come to be advisors because we want to rip people off. We're not in the business to make people lose money. We're in the business to help people grow their wealth and be financially comfortable and have peace of mind. So it's nice to actually know that our government are maybe looking at going, how can we help?
Okay, so there are clearly, obviously, lots of issues and deep conversations that need to be had. But thank you very much indeed, Amy, for your time, and to Dan and Trish. To Dan.
Yeah, look, I'm ridiculously proud to call myself an advisor. I've been an occupational therapist on the floor at a hospital. I've worked inside rehab firms. I've managed claims. I've built product. Understand what it's like to work on the inside. And I'm never prouder than when I pay a claim for a client. I get a real kick out of it, and I'm not embellishing that.
So you're proud today, but the future.
And so the time has come to be able to say that we're proud of the work we do, and people to take notice. However, it's also come at an application now of common sense that needs to be applied, given that we've got this opportunity. We can only serve more clients if the requirements to do so are far less cumbersome than they are today. So I hate to harp on it, but the delivery of advice, more Australians getting great protection advice, is very much anchored in what we have to do in order to deliver it. So the time has come to actually apply some pragmatic policies here, and we can all move on and improve this piece rather than let lawyers run the. I mean, it's madness. Now is the time for common sense.
Brilliant. Thank you, Dan. Thank you too, Trish.
I agree with what everyone said. We should be incredibly optimistic. As I've said, I'm an advisor. I've been in the advice industry for 6.5 years now, so I think a bit newer than all of you, and been through a bit of a tumultuous time in that 6.5 years. But I will echo a lot of the comments. I could not imagine another career. I could not imagine doing something else. I do think the pendulum swung too far, and now we're in the process of swinging it back to be more realistic. And I think that we just need to make sure that we're always focusing on, if we want quality advice for consumers, for Australians, we need to look at what are all the conflicts that really take away from the client's best interest. What is really stopping us from focusing solely on that, and try and get rid of all of the noise to stop us having to worry about everything else except for what's in their best interest.
So the government's been listening to that by virtue of the changes that are going to happen?
Yes, there's still a lot further to go. I think that it's going to be a long road, but positive steps. At least we're going in the right direction.
Thank you, Trish. Final word, Nate.
Look, I think all of the subsectors here today have been buffeted by significant regulatory change and substantial regulatory change pace over recent years, and very human instinct is to bunker down in that environment and just look after your knitting. I actually think that the reverse has to happen now, that we've got, as an industry, to get together, have the ducks lined up around what the key things are that matter to our subsectors looking forward 3, 5, 10 years, and be putting together a united view to the policymakers, because frankly the sector's been pretty disparate in the way they've approached these things in the past. And to that end, Sarah's ability to shepherd that merger through was extraordinary, and a real demonstration of the maturity that is now being visited on the sector. I don't think we had a choice, but how often do you see successful mergers in this space, right? So that's what we've got to keep doing. These sorts of fora where people can appreciate each other's perspectives and understand where we're all coming at a particular policy problem from, I think are really invaluable. We should keep doing it. Thanks for putting it together, Peter. We're delighted to host it today. Good to catch up with you all.